Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Copart stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 47 billion market cap. They're trading at $49 a share, and they have 961 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They do have a nice consistent free cash flow growth each year. It goes from $500 million to over 900 million. Net income is the profit or loss on the income statement. It's revenue minus expenses. That also grows each year from 900 million to 1.3 billion in the trailing 12 months. Revenue is a sales for the company, and that goes up nicely from 2021 to 2022, up about 33%. Then they add 370 million from 2022 to 2023, about a 10% growth. And then they hit their highest number in the trailing 12 months, 4 billion. So their financials look really solid. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 22 billion. We discounted the numbers back to today using the weighted average cost of capital. We get a value of the company of $19 billion. We divide that by 961 million shares. And we get a calculated stock price of $20. They're trading at $49, so they're trading at a 144% premium. It's a sell according to the model. This is something you'll notice a lot with stocks is when they're growing like this stock is. You see how much they're improving year after year? Investors bid the stock price way higher than it should be because investors look towards the future, and the future looks really bright, really strong. So people are buying the stock before the company hits these levels. But they probably need $2.5 to $3 billion of free cash flow to justify the $49 stock price. And they probably will get there. But when they eventually get to that level, the stock price would already be bid up so much that it's going to come down in price. And you'll start losing money if you buy when they do hit the $3.5 to $4 billion free cash flow mark. So you have to buy a stock before it goes up a lot, and you have to sell a stock before they start to plateau. And if you want to know how to do that, I'm not that sure. I'm still trying to figure it out myself. But let's learn together. There are 39 companies in the same industry as Copart, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. So they spend about $500 million in CapEx, a lot more than the average and median. A really good debt to equity ratio. Looks like they have no debt. They do not pay a dividend, but I have a feeling they're going to start paying one fairly soon because they do generate a good amount of free cash flow. They have a nice positive free cash flow, higher than the median average. They rank 4th in market cap of the 39 companies. But this industry, specialty business services, is kind of a unique industry. It's like a hodgepodge of all different companies. So I don't know really any company that's similar to Copart, because this company holds auctions where people bid on cars and trucks. So these companies are much different. Actually, most of these companies are unique in their own right. Like LegalZoom is a unique company. When you look at most industries, like if you look at the semiconductor industry, there's a lot of similarities with the companies. There is some uniqueness, but there's a lot of crossover. Here, there's really no crossover. And you could see if you look at their price multiples, they do seem overvalued because the stock price keeps getting bid up. Get it? Bid up as in an auction. They generate lots of revenue, $4 billion, but they generate the least amount of revenue out of anybody on this list relative to their market cap. How do I know this? Because they have the worst price to sales ratio out of all these companies. But they're growing, and that's why people keep buying the stock. Their 5-year annual revenue growth rate is 17%. But there are lots of stocks that keep getting pushed higher and higher. Remember Tesla? But you don't want to hold it too long because it will come down to reality. Every stock does. Let's go through their most recent 10Q. Let's dig into the income statement. So for the 3 months ending 10/31/2023, revenue of over $1 billion. That's up from 900 million last year. 859 million from service revenues, 160 million from vehicle sales. Let's see if they give a different breakdown of this number. Of the $1 billion of revenue, $840 million is in the US, $180 million internationally. And their international revenue is split between service revenue and vehicle sales. In the US, it's mostly service revenues, $760 million of the $840 million. Here they define service revenues. Service revenue consists of auction and auction-related sales transaction fees charged for vehicle remarketing services. So it's really all the fees throughout the auction process. Here's a list of fees: vehicle purchasing fees, vehicle listing fees, selling fees, transportation fees, title processing and preparation fees, storage fees, bidding fees, loading fees, lots and lots of fees. Certain fees are fixed, like storage fees. But for selling fees, they're going to make a lot more money on a high-end BMW than a low-end Honda Civic, because they get a cut of the sales price of the vehicle. They define vehicle sales. Certain vehicles are purchased and remarketed on the company's own behalf. So sometimes they own the cars and sell them, and they make money on the sale of the vehicle as well as auction fees. But most of their revenue is auction fees, where the cars are owned by a third party. Let's go back to the income statement. Operating expenses, yard operations. They have a massive inventory of cars they need to maintain. They obviously have a lot of payroll. They pay people. They have to pay for the land or real estate the cars sit on. Sometimes they have to maintain the cars if they break down. They spent $148 million in the cost of purchasing vehicles, and then they have general and administrative $68 million. So they have a healthy operating income of $400 million. That's about 40% of their revenue. Great margins. They receive $32 million of interest income. This is the interest on their investments. They spent $91 million of income taxes. So their net income is $333 million, up from $245 million. They're adding shares. Last year, 952 million shares outstanding. Now they have 958 million. But their net income is a lot higher than last year. So their EPS, earnings per share, is 35 cents. Last year was 26 cents. Let's take a look at the statement of cash flows. The statement of cash flows has three sections: operating, investing, and financing. So in their operating section, they had $375 million of cash flow in the most recent quarter. That's up from $311 million. To calculate operating cash flow, you start with your net income, $333 million. You add back depreciation and amortization, because you have to add back non-cash items on the income statement. That's $43 million. They had a $4.8 million gain in equity investments. We minus that out. That's a non-cash item. They passed through $8.3 million of stock-based compensation expenses. We add that back here. They had a gain of $1 million on the sale of property and equipment. We minus that out here. And then we have to adjust for changes in working capital. It looks like they extended $77 million of credit. So that's a cash outflow of $77 million. They added $3.7 million of inventory. That's a cash outflow. But last year, they sold $4 million of inventory. That's a cash inflow. It looks like they bought on credit. Maybe they bought vehicles on credit, $38 million. That's a cash inflow. But when they pay for those vehicles, say next quarter they pay the $38 million, then it'll be cash outflow in that accounting period. Let's look at their investing section. They spent $160 million on property and equipment. They sold $1.4 billion of securities. That's a cash inflow. In the financing section, they received $8 million of stock options. That's a cash inflow. Let's look at their balance sheet. This is as of 10/31 and 7/31. So they have current assets of $3.6 billion. Current liabilities of $600 million, a really healthy current ratio, well above 1. They have a ton of cash on hand, $2.6 billion, $755 million of accounts receivables. They have $42 million of inventory. Those are probably the cars. They have a ton of property and equipment, $2.9 billion. Here's a breakdown of the $2.9 billion. $1.9 billion is land, because they have a lot of inventory, a lot of cars, so they have to buy land to store those cars. $1.4 billion of buildings and improvements. They have lots of physical locations. Even though they're an auction, which they can do virtually, they still need to hold a lot of physical product, the cars. Transportation and other equipment, $500 million. They probably have a ton of big rigs to carry the cars. $91 million of office furniture and $92 million of software. Let's go back to the balance sheet. So they have 7.3 billion of assets, up from 6.7 billion. In terms of liabilities, $500 million of accounts payable. This is how much money they owe other companies for buying on credit. And they have 100 million of operating and finance lease liabilities. Let's look at the equity section of the balance sheet. Equity is assets minus liabilities. Assets 7.3 billion, liabilities 900 million. 7.3 billion minus 900 million equals 6.4 billion right here. They raised 1.1 billion from selling their business, selling stock. They profited 5.5 billion from running their business. That's the sum of all their prior net incomes. So they're a really profitable, healthy company. Let's look at the stock on finviz. I just signed up with finviz. I paid $300 yesterday for a 12-month subscription. Let me know what features you use on this website, because I'm getting used to it still. It looks like they started trading in 1995, or maybe 1994. And this blue line is their stock price. It's really hard to tell where the stock moved the first 10 years. But it looks like in 2005, it was still pretty low, about $1.50. And these numbers are split adjusted. So it wasn't actually trading at $1.50 this time. But when you adjust for stock splits, it was. And by 2016, it was still under $5. And that's when it really shot up. Look at this growth from 2016. It went up about 1,000%. By the end of 2018, it hit $16. Then over the next few months, it came down to $12. And that was in 2019. Then it shot way up to 25 in 2020. Then COVID happened. It came down to 17. And then from 20 to 2022, it went from 17 to almost 40. Then it had a dip in 2022 below 30. And then over the past year, it shot way up. It broke through 50. Now it's trading a little under 50. Here is the 5-year chart. It's a little easier to see. So pretty much the stock only goes up. As long as you held it for at least a year, you should have made money. I guess if you bought it for 39 in November 2021, in November 2022, it would have been 33. So you wouldn't have made money. If you held out a little longer, you could have broke even, and then a little longer, you could have made some money. They give a ton of information on finviz. The stock has been performing really well. It's up 60% year to date, up 60% for the full year. Half a year it's up 10%, and for the quarter it's up 12.5%. The target price by analysts is $53, which is pretty close to where it's trading at right now. The 52-week range is 30 to 52, so it's at the higher end of that range. It's only trading 5% below its 52-week high, and it's trading 65% above its 52-week low. The RSI, Relative Strength Index, is 52. The RSI provides signals about bullish and bearish momentum. So a stock is overbought if the RSI is above 70 and oversold when it's below 30. Copart is in the low 50s, so it's right between oversold and overbought. When a stock is oversold, that means it's undervalued and due for a pop. When a stock is overbought, then it's overvalued, and you should probably sell the stock or not buy it. When you see a 14 next to RSI, that means it uses a 14-day time frame to calculate this number. So this month, HSBC kept their hold rating on this stock, a target of 51. Argus kept their buy rating, a target of 53. North Coast downgraded them from buy to neutral. That was in May 2023. And the stuff below that is old from 2020 and 2021. I really like this bottom chart. It shows their stats and financials from 2017 up to current time, trailing 12 months. So here's their revenue from 2017 to 2023. And it goes up every single year. Really impressive growth from 1.4 billion to 3.9 billion. They should add the trailing 12 months. I'm not sure why they don't put the trailing 12 months on this chart. That's close to 4 billion. It's right here, the trailing 12 months, 4 billion. Their COGS, cost of goods sold, also goes up every single year from 800 million to 2.2 billion. Gross profit almost triples, goes up 200% from 600 million to 1.7 billion. Selling, general, and administrative expenses, that almost doubles from 130 million to 230 million. Operating income, a nice steady growth, 500 million to 1.5 billion. Net income, 400 million to 1.6 billion. Their EPS, 40 cents in 2017 to 50 cents to 60 cents to 80 cents, up to $1.30. EBITDA goes up 200% from $500 million to $1.6 billion. And their PE is flat from 2017 to current. It was highest in 2020 at 42. So it's a bit on the higher side, their PE. Their price to sales is a lot worse in 2017. It went from 5. It peaked at 13 in 2021. It's currently 11. This means investors are paying $11 for $1 revenue. Price to sales is stock price over revenue per share, or market cap over annual revenue. Gross margins are fairly flat in the low to mid 40s. It was 49% in 2021, their best year. Operating margin improved from 2017. It was 34%, now it's 39%. It was 42% in 2020. They have really good margins. Net margin looks good, 27% up to 32%. Shares outstanding is pretty steady, 920 million. It does go up to 957 million. Their market cap grew a lot, from 13 billion to 35 billion to 47 billion. It did drop from 2020 to 2021, then it more than rebounded in 2022. Here's some insider activity. The chairman of the board sold 100,000 shares. The value of his shares is $5 million, but he has a lot of shares. He has over 50 million shares. It looks like there's only selling, no buying from insiders. Let's take a look at the stock on Simply Wall Street. Its last price 49, market cap 47 billion, up 0.2% in the past week, up 61% in the past year. Let's see what they say about the company. They provide online auctions and vehicle remarketing services in the US, Canada, the UK, Brazil, Ireland, Germany, Finland, UAE, Oman, Bahrain, and Spain. It offers a range of services for processing and selling vehicles over the internet through its virtual bidding technology. The companies they work with are vehicle sellers, insurance companies, banks and finance companies, charities, fleet operators, dealers, vehicle rental companies, and individuals. The company's services include online seller access, salvage estimation, estimating, end-of-life vehicle processing, transportation, vehicle inspection stations, on-demand reporting, title processing and procurement, loan payoff, flexible vehicle processing programs, buy it now, member network, sales process, and dealer services. They also sell vehicles through cashforcars.com, cashforcars.ca. If a website ends in CA, that means it's Canadian. Cashforcars.de. If a website ends in DE, that means it's German. Cashforcars.co.uk and cashforcars.ie. That's their Irish website. They also offer a recycling service, which allows the public to purchase parts from salvaged and end-of-life vehicles. They have Copart 360, an online technology for posting vehicle images that captures clear 360-degree view of interiors and exteriors of a car, as well as trucks and vans. They have membership tiers for those registering to buy vehicles through Copart.com, and a virtual queue to secure a place in line while visiting one of its locations. They also provide non-salvage power sport vehicle remarketing services through live and online auction platforms. They sell their products mainly to licensed vehicle dismantlers, rebuilders, repair licensees, used vehicle dealers, and exporters, as well as to the public. They were incorporated in 1982, headquartered in Dallas, Texas. Simply Wall Street also thinks they're overvalued. Their price is $27. 10 analysts priced this stock at $51. They say it's slightly undervalued. Their current 12-month revenue is $4 billion. The forecast for 2024 is $4.2 billion, 2025 $4.6, 2026 $5.1 billion. Their debt in 2012 was $400 million. It got up to $700 million in 2016, but over the next several years they paid down their debt. They currently have almost no debt, and you can see how much their equity has improved over the years. It's currently at $6.4 billion, and they keep a good amount of cash on their balance sheet. It has gone up a lot over the years. Currently $2.6 billion. The CEO's annual salary is $1, total compensation $385,000. His tenure as CEO is almost 2 years. The CEO's compensation has been $1 since 2017. In the past 12 months, there's been 2 insider sells, 100,000 shares and 600,000 shares. 81% of the company is held by institutions, 10% by the general public, and 9% by insiders. The biggest shareholder is Vanguard at 10%. The founder of the company owns 5.6%. His value of the company is $2.6 billion. The CEO owns 3.2% of the company. Their employee count has gone up a lot over the years. It was 3,900 in 2013. They're up to 12,000. That's a bullish sign when a company adds employees. And the ticker trades on the Nasdaq, Deutsche Börse, Mexican Bolsa, London Stock Exchange, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.